May be gone for now, it's certainly not forgotten. Travelers ringing in the new year rang out the 10% federal airline ticket tax. Differences over how Congress should reimpose the tax has split the airline industry, and it's the major airlines versus the low-cost carriers. In today's travel tip, Kevin McCullough takes a look at both sides of the coin.
When 1996 expired, so did the 10% tax on domestic airline tickets, jeopardizing one source of revenue for the nation's airports. The ticket tax paid for the operating costs of the Federal Aviation Administration, such as air traffic control and airport security and development. They cost about $5 billion annually. Without this money coming in, experts say the safety and future of the nation's airports could be at risk. In a recent interview, outgoing Transportation Secretary Federico Pena urged members of Congress to put this issue at the top of their to-do list when they reconvene early this year. But some Washington watchers don't see a resolution happening anytime soon, noting that Congress won't be able to address the issue until two key studies are completed. One due out in February, the other not until August. Under the expired system, the tax was 10% of the ticket price determined by each airline.
Some airlines with traditional low fares would generate fewer taxes, where the airlines with higher fares feel that they're generating too many taxes.
The structure of the tax has the airlines in separate camps, with the large carriers calling for a new user fee system.
What we're saying is that system really doesn't fairly reflect the costs and services that the FAA has to incur in order to produce the services to the American consumer and the traveling public. So we're arguing for a usage-based fee, which is essentially a flat tax that would be charged equitably and distribute those costs more rationally among all aviation consumers.
The smaller carriers see the issue quite differently.
Listening to the fairness argument is rather humorous because, after all, it is solely within the airline's unilateral power to determine the price that it charges its consumers. If the big airlines want to continue charging the tremendous diversity in prices to their customers, that's, of course, their decision. That is the cause for the diversity, the difference, if you will, in the taxes being paid, not the law.
What's fair remains to be determined. However, travelers are going to pay whether it's the flat tax or the user fee. And so the most important issue now seems to be a quick resolution of the differences between Congress and the carriers over how to administer the tax. Any long, drawn-out battle would only increase the cost to the traveling public. Kevin McCullough, CNBC Business News.
Did the bowl games rake in bowls of cash for the advertisers? We'll have that story and more in just a second, but first a look at how the most widely held stocks did today. In our Sports View segment today, San Diego coach Bobby Ross is saying goodbye. He says he's leaving the Chargers over philosophical differences with the team's general manager. Ross has 3 years remaining on a contract that pays $1 million annually. He leaves with a 5-year record of 47-33 plus a 3-3 mark in 3 playoff appearances. Ross guided the Chargers to their only Super Bowl appearance 2 years ago. Some big-name businesses scored advertising touchdowns with sports fans over the New Year's holiday week. With one bowl game after another and viewers bored with sitcom reruns, it was pretty easy for businesses to find a captive audience glued to the gridiron.
It was a blowout for Florida in its championship win over Florida State, and possibly for its title sponsor, too. The Nokia Sugar Bowl had no competition among football fans Thursday night.
You take a company like Nokia, which isn't a very, very well-known brand, but after something like that, it's a major blip in terms of awareness.
But even on the crowded New Year's Day schedule, a growing number of big-paying corporate sponsors attach themselves to bowl games. Among the companies bowling for dollars are Jeep Eagle, Poland Weed Eater, Kelly Tire, Norwest, and Builder Square.
The title sponsorships for the biggest bowl games, the New Year's Day and January 2nd games, are going for, between $1.5 to $4 million per year. And obviously the games that take place earlier during the bowl season, a little bit less than that.
I'm just the
at the end. And commercials are also expensive because prime time is in repeat over the holidays. And the advertising is worth it, depending on that day's quality of play. If it's a lopsided game, viewers often change channels. So marketers find they must spread the risk by advertising on more than one game. Because of the benefits of brand awareness and potential for big ratings, corporate sponsorship may not have reached the saturation point, although some experts predict the number of bowl games may decline.
We have twice as many bowl games as we had 10 years ago, and some of them didn't sell out this year, and it's particularly tough in some of the games that really have no consequence whatsoever on final rankings and championship considerations.
That shouldn't limit companies intent on sports marketing. One of the hottest trends right now is renaming a sports venue with a corporate sponsor. Susan Lasovich, CNBC Business News.
And here's all the news that broke after the closing bell. An Italian financier scheduled to be sentenced on Monday has fled the country, and a warrant has been issued for his arrest. Giancarlo Peretti was to be sentenced for perjury and tampering with evidence in the case that cost him control of the MGM studios. Jay Coggin, his attorney in Beverly Hills, says he has received a fax from Peretti saying he is in Italy and is being represented by an Italian attorney. Coggin says, quote, "I have no idea what's in Mr. Peretti's mind. I'm shocked and surprised." Equitable says it's looking at, quote, strategic alternatives for its Equitable real estate subsidiary. And it says that while there have been talks about a possible sale, there's no deal yet. Equitable says its real estate unit is the nation's leading manager of pension fund assets invested in real estate. A U.S. appeals court is rejecting an attempt by two community groups to temporarily block the $9.8 billion acquisition of Boatman's bank shares by Nations Bank. It's scheduled to be completed next Tuesday. One of those groups says it is thinking about asking the U.S. Supreme Court for an emergency order blocking the link-up. The groups argue that the merger will hurt bank customers. Honda's Acura division says its U.S. sales increased by 12% in 1996, and its general manager tells Reuters the automaker hopes for more growth this year. General Motors' Saturn unit says its car sales fell by 2.5% in 1996, although it did manage to exceed its financial targets. And Nissan says sales of its domestically made cars fell by 9.2% last month. Truck sales increased, though, by 12.7%.
And here's a quick look at today's headlines. The world's largest chip maker sparked a wild rally on Wall Street. Intel shot up on positive comments from several Wall Street brokers. Salomon Brothers says Intel should easily beat street estimates of $183 a share for the fourth quarter. The Intel shares finishing up 8 at 138 3/8. And the blue chip staged an impressive rally today, sparked by strength in the high-tech issues. The Dow jumping 101.60 points to 65.4409. Intel helping to drive the tech-heavy NASDAQ to its second largest one-day point gain and its third highest close ever. The NASDAQ zooming, finishing up almost 30 points at 1310.68. But there could be some clouds on the horizon. Business Week predicting the Fed will hike interest rates by a quarter point early this year. The 30-year long bond, as a result of that, finished well off of its best levels of the day, up only 2 ticks at 96.30, the yield 6.74%. President Clinton put his okay on a 6-month delay in imposing sanctions against Cuba. The president, on vacation in the U.S. Virgin Islands, announced today that he will extend the suspension of a law that would let Americans sue foreign companies that use confiscated U.S. property in Cuba. And on that note, that will do it for Market Wrap for this Friday, January 3rd. I'm Sue Herrera. I'll see you in a half an hour on Business Tonight. Ron Insana is next with Business Insiders.
And I'm Brenda Butler. We'll see you back here on Monday at the sound of the closing bell. Have a great weekend.
Have a great weekend.
Subscribe now and get 2 weeks of the Journal free with a paid 10-week subscription. That's 12 weeks for 66 cents per day. Call 800-647-5700. That's 800-647-5700 for the Wall Street Journal.
When seconds count, you need results fast. Now get New York Stock Exchange quotes in real time on CNBC. Instant performance from the world leader in business news. The stock ticker in real time on CNBC. First in business worldwide.
Thank you for watching, and remember to like, comment, and subscribe.